Malaysia's GDP grew by 6.2% in the third quarter of 2017, thanks to domestic demand exceeding economists' expectations. Bank Negara also said that on the supply side, all major sectors of the economy expanded. Governor Muhammad Ibrahim said Malaysia benefited from the growth in advanced and global economies as they continue to expand, supported by consumption and investment. He adds that given the continued strong performance in the third quarter, the Malaysian economy is on course to register growth that is close to the upper range of the official projection of 5.2 to 5.7% this year. The strong numbers come on the back of a moderation in the country's headline inflation to 3.8% during the quarter. Muhammad said the volatility in the oil price continued to affect the country's inflation level. Under the current environment, Muhammad believes that the central bank has some flexibility to manage its monetary policy amid the normalization of the interest rates among developed countries, especially the United States. Bank Negara warns that the imbalances in the property market pose significant risk to the overall market in the event of a shock. Governor Muhammad Ibrahim said while financial sector's exposure to this space is within a comfortable level, the oversupply in some of these segments could cause negative spillover effect to the broader economy. Among the segments highlighted are high-rise condo, office space and retail malls. Muhammad said the supply-demand imbalances has increased since 2015, pointing to the decade high of unsold residential properties, with the majority of unsold units being in the above 250,000 price category. He explains that this is due to the mismatch between the prices of new launches and the household's affordability. Meanwhile, office space also has high office vacancy rates, especially in the Klang Valley. The central bank's report shows that the incoming supply of 38 million square feet of office space could exacerbate the glut, with office vacancy expected to reach a record high of 32% in 2021. Similarly, in the retail space, 140 new malls is expected to enter the market across key areas, such as Klang Valley, Penang and Johor, which could worsen the oversupply moving forward. IOI Corp had a stellar first quarter with net profit soaring over 243%. Earnings came in at 360 million ringgit, up from only 104.8 million ringgit last year. This came on the back of forex gains and lower fair value loss on derivative financial instruments from its resource-based manufacturing segment. This was despite a 5.3% decline in revenue to 2.21 billion ringgit as compared with 2.33 billion a year ago. In a Bursa filing, the group said gains in its 2018 first quarter was offset by lower fair value gain on biological assets in its plantation segment. Going forward, IOI said it expected its plantation segment to perform satisfactorily as its fresh fruit bunches production had recovered and prices of crude palm oil and palm kernel remain high, while its oleochemical sub-segment is also expected to perform well due to steady global economic growth. As for oil and fats sub-segment, IOI is expecting it to benefit from higher business volume from multinational customers and the impending trans fat ban in the US come mid-2018. MRCB-Quill REIT's third quarter net profit rose over 38% on the back of higher realized revenue. Earnings came in at 21.38 million ringgit, up from only 15.23 million ringgit last year. Revenue for the quarter stood at 44.88 million ringgit, up 36.7% from 32.83 million ringgit previously. The group said its realized revenue was due to additional revenue arising from the acquisition of Menara Shell last year, and also higher rental income due to step-up rent adjustments from QB3, Wisma Technip, QB5 and QB2. Prospects-wise, MRCB-Quill remains positive to deliver stable income distribution to unit holders for 2017. Moving forward to the next year, the company said the Klang Valley office market is expected to remain challenging in the near term. In view of such forecasts, it will focus on intensifying its asset management and leasing strategies to meet the challenging operating environment. Newly ACE market-listed Kejuruteraan Asastera or KAB is targeting an order book of 250 million ringgit by the year-end. The electrical and mechanical engineering firm's current order book stands at 210 million ringgit, which is expected to last till 2019. KAB is also tendering for projects worth 250 million ringgit. KAB had a stellar debut this morning, opening at 33 cent, a 32% premium from its 25 cent issue price. The 20 million raised from its IPO, which will be allocated for working capital, establishing new offices in JB and KL, capex and listing expenses. MD Lai Keng On said moving forward, the group intends to grow its revenue contribution from its mechanical engineering division. Lai said the company is targeting between a 10% and 20% contribution from mechanical engineering next year and up to 50% in the next 5 years. The counter corrected slightly later in the day, closing at 30 cents.